Hi everyone. In our previous video, we discussed the accounting for a fairly straightforward finance lease. In this video, we'll do all of the journal entries necessary to record a 3-year operating lease, both at the inception of the lease and throughout the 3 years of the operating lease. On January 1st, 20X1, Win Heat Transfer leased office space under a 3-year operating lease agreement. The arrangement specified 3 annual rent payments at $80,000 each, beginning at December 31st, X1, and on each December 31st through 20X3. The lessor, HVAC Leasing, calculates lease payments based on an annual interest rate of 5%. Win also paid a $100,000 advance payment at the beginning of the lease. With the permission of the owner, Win made structural modifications to the building before occupying the space at a cost of $180,000. The useful life of the building and the structural modifications were estimated to be 30 years with no residual value. Prepare the appropriate entries for Win Heat Transfer from the beginning of the lease through the end of 20X3. Assume the leasehold improvements of $180,000 have already been booked. Win's fiscal year ends on December 31st. It is a calendar year. There are 2 journal entries necessary at January 1st, 20X1. See if you can write those journal entries. Then start your video again to check your answer. Well, we need to find the present value of the 3 $80,000 payments. And we also need to add to that present value the $100,000 that was paid at the very beginning of the lease to calculate an original lease liability of $317,860. Looking at the present value table, present value of an ordinary annuity, where N equals 3 and I equals 5, you will see a factor of 2.72325. Multiply the $80,000 times that factor to calculate the present value of the 3 $80,000 payments. Add the $100,000 to calculate, as I said, $317,860. Debit right of use asset, $317,860, and credit lease payable, $317,860. And then on that very same day, debit the lease payable for the $100,000 that was paid at the beginning of the lease, and credit cash $100,000. That is so logical. It's really fun. Let's take a look at this factor. Present value of an ordinary annuity, where N equals 3, I equals 5. Table 4. N equals 3, I equals 5%. 2.72325. And that's where that factor came from. Okay. At December 31st, X1, the end of the first year, we need to make 3 journal entries. 2 relate to the lease, and the third one relates to the $180,000 leasehold improvements that need to be depreciated on a straight line basis over 3 years. See if you can come up with those journal entries. In order to calculate the interest expense, we take our original lease liability minus the $100,000 that was paid up front. So the $217,860 is the lease liability on which we calculate the first year's interest at 5%. So the first year's interest expense is $10,893, debit interest expense. we need to credit cash for the $80,000 check we write a check for $80,000 at the end of each year in this lease. And the difference is a debit to lease payable. That's the principal that's paid on that lease liability. Now, the amortization is slightly confusing because the $100,000 is muddying things up just a little bit. If you take the $80,000 times 3, that's pretty clear cut, and add the $100,000 to it, you have cash going out the door of $340,000. Divide that by 3, and you have a straight line lease expense of $113,333. The amount that hits the income statement in an operating lease has to be a total of the straight line lease expense. And it hits the income statement in a combination of interest expense and amortization expense. So if you take the $113,333 straight line lease expense minus the interest that was paid during the year 1, the difference is charged to amortization expense. In other words, add these two numbers together and they equal the straight line lease expense. So this is a calculated number of the straight line lease expense minus the amount that was charged to interest, leaves the rest to be charged to amortization expense. Debit amortization expense, $102,440. Credit right to use asset, $102,440. I think the last journal entry is the easiest of them all. The company paid $180,000 for leasehold improvements. They need to be depreciated over the life of the lease, 3-year life of the lease. So $180,000 divided by 3 is $60,000 of depreciation expense on the leasehold improvements each year. Debit depreciation expense, $60,000. Credit accumulated depreciation dash leasehold improvements, $60,000. Record the 3 journal entries necessary at the end of the 2nd year. They will be basically the same journal entries, but the numbers will be a little bit different. These numbers will be the same. This number will be the same. All the other numbers will change. Give it a try. Let's talk about the interest expense. At the beginning of year 1, after making the initial $100,000 payment, we had a lease liability of $217,860. During year 1, on December 31st, X1, when we made that first $80,000 payment, we debited the lease liability for $69,107, which reduced the lease liability. So the lease liability at the end of year 1, after that first payment, was $148,753 times 5% equals $7,438 of interest expense for year 2. So when the second lease payment is made, debit interest expense, $7,438, credit cash, $80,000, and the difference is a debit to lease payable, $72,562. We calculated the $113,333 of straight line lease expense. Subtract from that the amount that was charged to interest, and the balance has to be debited to amortization expense. Debit amortization expense, $105,895. and credit right-to-use asset, $105,895. And the depreciation expense journal entry is the same. Debit depreciation expense, $60,000. Credit accumulated depreciation leasehold improvements, $60,000. Okay, I think you've got the hang of this now. Go ahead and write the 3 journal entries necessary for December 31st X2, the 3rd lease payment. There'll be 3 very similar journal entries. Give it a try. After the first lease payment, the lease liability was $148,753. During year 2, we debited lease payable, or the lease liability, for $72,562. So after the second lease payment at December 31st X2, the lease liability was $76,191 times 5% interest for year 3. And the interest expense for year 3 is $3,810. Debit interest expense, $3,810, credit cash for $80,000, and the difference is a debit to lease payable, $76,190. The right to use, the straight line lease expense, we had already calculated at $113,333. That's the amount that has to be charged to expense every year between interest expense and amortization expense. So of the $113,333, $3,810 was charged to interest expense, so the balance, the difference, needs to be charged to amortization expense. Debit amortization expense, $109,523, and credit right-to-use asset, $109,523, and the 3rd and final year depreciation expense on the leasehold improvements, debit depreciation expense, $60,000, credit accumulated depreciation leasehold improvements. That's a pretty good problem. The $100,000 up front complicated the lease liability a little bit, but I think you probably got the hang of it by the end of the 3rd payment at least. That's all for this video. In our next video, we will start out with an operating lease, but circumstances change during the operating lease, and it needs to be changed to a finance lease. See you next time.